In December of 2017, Roger Ver publicly excoriated Andreas Antonopoulos on Twitter for essentially being broke, despite the fact that he was an early Bitcoin promoter. The community response was overwhelming, with more than 100 Bitcoin anonymously donated to a Bitcoin address belonging to Andreas, in a movement that became known by the hashtag #ThankYouAndreas. This podcast is for information and entertainment purposes only. Nothing on this podcast should be construed as financial advice. All views expressed on this podcast are solely the opinions of the host and/or any guests that we might have from time to time. Nothing on this podcast should be construed as a specific inducement to make a particular investment or to follow a particular investing strategy. Hello, you sexy sat stackers, and welcome to episode 202 of the Bitcoin Bulletin Podcast, as we close in on 4 full years of the Bitcoin Bulletin Podcast later this summer. I tentatively titled this episode Back to the Basics, and it's easy to get caught up in the moment, especially in Bitcoin, because it's tech forward, it's a technical revolution, and so with all things technology, things become outdated almost the minute that they're put out, whether it's hardware, software, or a tweet, for example. And so for those of you, even if you've been around quite a while, we've kind of almost forgotten that the original Bitcoin educator, the most famous Bitcoin educator by far, and the author of the first actual Bibles of Bitcoin, as far as Bitcoin books are concerned, Mastering Bitcoin and the Internet of Money, was Andreas Antonopoulos. He's A. Antonop on YouTube, and he still puts out videos. I think his last video was in December, and it was about those IRS proposed changes where they were getting rid of first in, first out for accounting purposes. But if you go back 7 or 8 years to some of his earlier videos, in fact, my favorite video of his is entitled Less Than Useless. And I think it's particularly poignant today, especially in Europe, because basically, it's about financial surveillance and the crackdown on financial privacy, which is something that's definitely reared its ugly head again in the world, and a path we'd probably be headed down in full force had the presidential election in the United States turned out just slightly different than it did. But if you haven't watched Andreas's earliest videos, I suggest you go back and do so, because they're very timely. They're very entertaining. He always begins his videos with an anecdote. For example, in Less Than Useless, he talks about the Hippocratic Oath and do no harm as a concept in medicine and where that comes from. And he talks about the old practice of bloodletting and how that actually probably most likely led to the death of our first president of the United States, George Washington, who was a big believer in the practice of bloodletting. And anyway, I'll let Andreas explain it to you. That video is entitled Less Than Useless. But the one thing you'll notice when you watch these old Andreas videos, well, you're going to notice 2 things. First of all, you're going to notice that when he's giving a speech and they're showing the room, there's like maybe 2 or 3 people in the room. People get up and walk out halfway through his presentation, etc. And you're like, wow, Bitcoin is worth less than $1 when a lot of those videos were recorded. And a lot of those people, especially ones getting up and walking out, probably feel like complete idiots right about now. But the other thing you notice is that what he says about Bitcoin is timeless. It's as true today as it was then. They're very freedom-focused videos. And one of the things that he says in a couple of his videos is that when he travels the world and gives these presentations that one of which, you were probably watching on the videos, was that when he's in the United States, he has to explain to people why they should use Bitcoin, why they should be excited about Bitcoin, why they should adopt Bitcoin. But when he was in places like Argentina or Africa, traveling in other places around the world, he never had to explain why. He only had to explain how. Anyway, in the introduction, I hearkened back to December of 2017, in which not only was that the peak of the 2017 bull run, the climax of the halving cycle kicked off by the 2016 halving cycle. I guess we hadn't quite hit the all-time high then. We were about 2 weeks away from that all-time high of about $20,000 at the time, but Roger Ver was already kind of persona non grata in the Bitcoin community because he'd already had the hash wars, the fork wars. He'd already been trying to crush Bitcoin. he was in the process of scamming people because he had the domain name bitcoin.com. And on that website, he was promoting Bcash. If you clicked on buy Bitcoin, you were really buying Bcash. But the long and the short of it is that he had publicly excoriated Andreas because Andreas was asking for Patreon contributions to help continue his work. And Vera's point was, well, if you weren't such a horrible financial planner, you should be a millionaire by now based on the current price of Bitcoin. And Andreas's point was he was living on a Bitcoin standard. He was probably like the first person to get on zero. There were adopters that were earlier than him, like Hal Finney, may he rest in peace. But Andreas was probably one of the first people to live on a Bitcoin standard, and he was doing so very, very early. So despite the fact he had a lot of Bitcoin, he was spending it. He was paying for his expenses, his rent, everything he was paying for everything he could in Bitcoin, living off the Bitcoin. So at that time, he had no Bitcoin. And of course, that changed when the Bitcoin community rallied around Andreas with a hashtag thank you, Andreas, contributing more than 100 Bitcoin to one of his Bitcoin addresses. And that's summed up in an article from December 8th of 2017 in Fortune magazine entitled, "Why People Are Giving This Man Almost 2 million in Free Bitcoin." Can you imagine more than 100 Bitcoin being worth almost 2 million US dollars? And the article goes on to say that even though Bitcoin prices have reached over $15,700, some users are quite literally giving it away to one man, apparently making an overnight millionaire of an early Bitcoin advocate who says he only just recently paid off his debts. After revealing in late November he had not profited off Bitcoin's nearly 2,000% rise over the last year, Andreas Antonopoulos, who has convinced many to get into Bitcoin through his speeches and books, received hundreds of donations totaling $1.6 million worth of Bitcoin as of Friday. That's about 102 tokens over the course of 3 days. Quote, "Words are my craft, but tonight I am speechless," he wrote on Twitter Wednesday, noting shortly afterward that he was going offline for a few days to, quote, "process everything that happened." The windfall came after a Twitter user questioned why Antonopoulos, a well-known figure in the Bitcoin community, needed donations via Patreon to fund his work and living. Some assumed that Bitcoin's massive rise likely left Antonopoulos rich, given his early advocacy for the cryptocurrency. Antonopoulos countered, noting that he only recently got out of debt and couldn't hold on to his early investments. But the donations really began flooding in when days later, another well-known Bitcoin advocate, Roger Ver, appeared to rub salt in his wounds, questioning why Antonopoulos hadn't made investments in Bitcoin. "I did invest, Roger," Antonopoulos wrote, adding that he couldn't afford to buy Bitcoin at the time. Antonopoulos elaborated further on Patreon, saying that he had fallen in love with Bitcoin around 2012. Because of his passion for the cryptocurrency, he eventually abandoned his job as a freelance consultant, deciding instead to speak at conferences about Bitcoin, consulting for startups, and writing articles free of charge. By late 2013, he had begun liquidating his retirement fund and went deep into debt in order to fund his activities. Quote, "I could have become wealthy if only I hadn't sold. If only I hadn't given away hundreds of Bitcoin to complete strangers. If only I had reduced my expenses more. If only I had made smarter choices. If only," Antonopoulos wrote in a Patreon post, explaining that while he felt fortunate to be debt-free, the critical tweets on Twitter were still painful reminders of his past choices. Now, I'm going to interdict a little bit here because I don't think he was actually being so much apologetic there as he was lamenting, because he wasn't saying he shouldn't have given away hundreds of free Bitcoin, because that was one of the things he would do, that something that used to happen at Bitcoin meetups that I haven't actually seen happen at a meetup recently, where you introduce someone to Bitcoin by showing them how to install a wallet, and then you give them their first $5 or $10 worth of Bitcoin to get them started. Something I'd like to see more of, but I don't think he was saying he shouldn't have done that. I think if you listen to his speech, you can kind of read this in his voice, or hear his voice in your head. And I don't get the impression he was saying he wouldn't have done that. He made a mistake. He was just expressing in a manner of course I could be a millionaire if I hadn't done this or if I hadn't done that. The article continues, "As a result of the post on Twitter and Patreon, Bitcoin owners began donating Bitcoin to Antonopoulos' Bitcoin address. Most gave a fraction of a Bitcoin to the cryptocurrency advocate, but others gave much more. One user gave 79 Bitcoin, or about $580,900. Another sent him $1.2 million worth. Twitter, meanwhile, turned into a love fest over Antonopoulos and his roadshows. Quote, I sat reading the responses with tears in my eyes. An outpouring of positivity washed over me, Antonopoulos wrote. People I have never met jumped to my defense, reminding me that they started their journey after watching my videos or reading my books. And that's where we're going to break it off with that article. The point being, where we are in society, in the world, at this Bitcoin bull run, sometimes I think it's healthy to just take a step back, take a deep breath, and zoom out. They say, well, the popular phrase amongst a lot of the Bitcoin community is get back to your first principles, get back to the basics. As with anything, zoom out, keep the long-term perspective, and that includes remembering why you got into Bitcoin. It's easy to become obsessed with the price during a bull run. People that their average cost basis is probably less than 20,000 US dollars are expressing frustration that the price of Bitcoin is only around 98,000 US dollars right now, when clearly, Bitcoin's higher than they ever would have expected just several months ago. So again, it's important to take a deep breath, to zoom out, and to remember why you're here and to get back to the basics. And I think that one of the easiest ways fundamentally to get back to the basics is just to go back, hit rewind, and watch some of those old Andreas Antonopoulos videos, at least as far back as 2017 and 2016. You will find that they're just as true today as they were then. None of them are really that dated. He talks about fundamentals, and those, of course, haven't changed. Some of the things that were going on in the world at the time have come full circle, and they're happening again, like our invasion of financial privacy, the European Union trying to crack down on your privacy in general, your freedom of speech, but certainly your financial privacy. So do yourself a favor. If you haven't watched those videos, Andreas Antonopoulos is at @Antonop on YouTube. And even if you have watched the videos, do yourself a favor, go back, watch a few of your favorite videos, and remember why you got into Bitcoin in the first place. All right, we have a lot of news to try to talk about today before I run out of time. But of course, before we do get into the news, let's take our customary look at Bitcoin's vital statistics. At the time of this recording, we are sitting at a block height of 883,499, and Bitcoin is ringing in just under 98,000 US dollars. In fact, it's coming in at 97,670 US dollars per Bitcoin. That is about 1,000 US dollars more than Bitcoin was ringing in at last DCA Wednesday. So while people are lamenting the crash, in fact, I saw multiple headlines today saying that Bitcoin has crashed because of the Federal Reserve, because of interest rates, and because of the potential of inflation not going away anytime soon. But again, as with everything, if you just take a step back and zoom out, Bitcoin's actually worth 1,000 US dollars a coin more than it was last week at this time. Along those lines, one Bitcoin will still purchase you over 1,000 sats per dollar, currently ringing in at 1,024 sats for every paper fiat cuckbuck that you convert into Bitcoin. And Bitcoin's US dollar value gives it a current market cap of 1.94 trillion US dollars. That's below that $2 trillion market cap that we've crossed over a couple of times in the last month or so, but still a really phenomenal market cap when you consider that the entire market capitalization of silver is 1.83 trillion, or at least is estimated to be about 1.83 trillion. So significantly higher than silver. And that when you consider that if Bitcoin were a company, it would be the sixth largest company by market cap, right behind Amazon, which rings in at 1.97 trillion, and in front of Saudi Aramco at 1.75 trillion. And if Bitcoin were to be compared to Apple, which is the most valuable company by market cap, Apple has a market cap currently of 3.56 trillion US dollars. That shows you how early we are, because a $2 trillion market cap, it seems like a lot, and it is. A Bitcoin price of almost $100,000 per coin seems really expensive, and it is. That's a lot of money, but of course you don't have to buy a full Bitcoin, obviously. When we have hyper Bitcoinization, people are going to be transacting in Satoshis or millisats, micro Satoshi transactions. But if the same amount of money poured into Bitcoin that normies have just invested into Apple, well, Apple has a market cap that's more than 1.8x. It's 1.825x higher than Bitcoin. That means when Bitcoin passes Apple at the current valuation of Apple, one Bitcoin will be worth 179,224 US dollars. I am a firm believer that Bitcoin will go a heck of a lot higher than that, probably even this cycle. Nobody has a crystal ball, but we're going to talk more about why I think that Bitcoin could go potentially way higher in just a few minutes. Of course, most normies now, that are aware of Bitcoin, the talking heads in the traditional financial media, they're referring to Bitcoin as electronic gold because that's kind of what Bitcoin is functionally. It's a hard currency, a scarce asset. Gold is one of the most scarce assets on Earth, not completely scarce because more new gold, fresh gold is dug up every day. And of course, only a tiny percent of the gold that's buried into the earth can even, or even dissolved in seawater, can even be extracted right now under current technology. But mining technology and processes are getting better every day. One day, it's not inconceivable that we'll be mining that asteroid that contains, more gold on it than the entire world global economy is worth. And so Bitcoin being absolutely scarce, where there will never, ever be more than 21 million Bitcoin in existence ever, no new find, no new strike, no asteroid is ever going to bring more than 21 million Bitcoin to Earth. So Bitcoin is often referred to as digital gold because it has all those scarcity, those hard money principles that made gold the leading hard currency throughout history up until the discovery of Bitcoin. So when Bitcoin just finally fulfills its role as digital gold, well, gold has a market cap that's more than 17x what Bitcoin's current market cap is. And that means that if Bitcoin were to surpass or to tie gold's market cap, just if it were to, nudge ahead and take the mantle away from gold, that means it would have to go up. It would have to increase in price to a price of 1,696,527 US dollars per Bitcoin. Now that probably sounds like a lot to you because prior to inflation and all commodities going up in price, that number was closer to, 800,000 US dollars. But with every commodity inflating in price, gold is inflated in price as well. So at the current price of gold, which is hovering around its new all-time high as well, in US dollar terms, not in Bitcoin terms, of course, that means we're talking 1.6 million, almost $1.7 million per Bitcoin just to become on par with gold as a reserve asset, as a reserve currency. Now, remember what I said about 2017. I said that I'm getting 2017 vibes. I've said multiple times on multiple podcasts, even back in 2016, that the setup for this halving cycle really reminded me a lot about where we were during the 2016 halving cycle. And that has continued to be the case. I laid this out in a couple of different podcasts, one podcast in particular in detail, but 2017 is only a little over a month over so far. 2025. But if you look back at 2017 began with Bitcoin valued at less than 1,000 US dollars per Bitcoin. In fact, it was less than $800 per Bitcoin, right around 800. But we're going to round it up to 1,000 for Bitcoin for this experiment, for this thought experiment. Now, Bitcoin went on to finish the bull run at the end of December 2017 at just under 20,000 US dollars per Bitcoin. In fact, most people say 20,000, and that depends on what exchange you were getting your data from, because there are some exchanges that say that Bitcoin only got to almost 17,000. Others say that it actually broke 20,000. So for the point of this thought experiment, we're going to round to 20,000 US dollars. Now, from 1,000 to 20, that's a factor, that's 20x, right? So if Bitcoin were to 20x from where we are, and of course, Bitcoin is a little higher at the beginning of the year. So if you round it up to 100,000, this number would be even bigger, but we're going to use the current price of Bitcoin. If Bitcoin were to 20x from the current price of Bitcoin, that means that one Bitcoin would be worth 1,953,400 US dollars. Of course, if it were to 20x from where it was over $100,000 per Bitcoin in the beginning of January, that means we'd be over $2 million a coin. Now, while that definitely sounds like a moonshot, even to me, surpassing the market cap of gold this cycle wouldn't be trend shattering, right? If someone said Bitcoin might hit 2 million this cycle, even I would say that seems a little unrealistic. And I'm a maxi. I mean, I understand why most people would shake their head and say no chance, maybe 250,000 if we're lucky, right? Something diminishing returns, whatever. But if Bitcoin were to just become the equivalent of digital gold, to do that, it would have to eclipse gold's market cap functionally, and that would mean we'd be well over $1 million US by the end of this year. Now, we all know this is going to happen sooner rather than later. But if you think about it, if you stop and break it down, if you look at where we are with corporate FOMO, with nation state FOMO, and with state FOMO gearing up, starting to kick into high gear, if nation states get into a digital arms race, each competing to convert their treasury reserves from gold to Bitcoin in the coming months, well, this could actually very easily happen. Because if countries, even if a handful of countries, the United States, a couple European countries, maybe Russia, China, just a handful of companies try and outstack each other in the next year, that means that they're going to be functionally replacing their gold reserves, the importance of their gold reserves with Bitcoin. And it would be reasonable that then the price of Bitcoin would soar, not only because gold, Bitcoin is more scarce than gold, but because Bitcoin would be flipping gold's purpose. Countries would no longer be competing to see who stacks the most gold, but who stacks the most Bitcoin. Bitcoin would literally at that point have proven itself to be digital gold. It will have replaced gold as the digital version. So when you look at it in terms of Bitcoin adoption, what you think, you might think if I said Bitcoin's going to hit 2 million, you're like, no way, that's a pipe dream. But if I said countries are going to start adopting a Bitcoin strategic reserve this year, you would say, of course they're going to. We already know the United States has proposed it, and we know other countries like Czechoslovakia are trying to front run the United States. So that goes hand in hand with the price of Bitcoin going to the moon. The first step, of course, being surpassing the market capitalization of gold. So I don't have a crystal ball. I can't tell you what exactly is going to happen. Certainly not what the price of Bitcoin is going to be on any given day. But I can tell you that $2 million Bitcoin is way more reasonable sooner than many, many, many people think. All right. That was a bit of a tangent. So let's get back to the vital statistics. Speaking of gold and usurping gold, if you do continue to value your wealth in gold, it will currently cost you 33.6 ounces of gold to purchase just one Bitcoin. That's a tenth of an ounce more than last DCA Wednesday. So despite the fact the price of gold is actually up this week as well, when you look at it in terms of Bitcoin, it continues to trend down. Now, I don't expect all the fiat currencies in the world to go away overnight. In fact, there will probably always be a fiat currency, because even if all fiat currency collapses, there will always be some aspiring new dictator, some aspiring new communist who clings to the pillars of communism, the tenets of communism, one of which is you've got to control the money. You've got to have a federal reserve. You got to have a central bank that controls the issuance and the supply of money in the system. And you can't do that with a currency you can't print. So there will always be probably a currency out there. And there will probably always be a gold bug out there clinging to gold. And it's always going to have, it's going to have some beauty, some utility. There will be people that want to diversify, even if they realize that gold is a second-class citizen compared to Bitcoin. So when I say gold will trend to zero in Bitcoin terms, that's over the long haul. I don't expect that gold will become worthless, by the end of 2025 or anything goofy like that. But it's going to be less and less valuable in Bitcoin terms. Now, even if gold goes on to set all-time high after all-time high in US dollar terms, remember, eggs are at an all-time high in US dollar terms either, and that doesn't mean that eggs are the ultimate hedge against inflation. They're just a commodity, like anything else, like bacon, like frozen concentrated orange juice, to steal a line from the Eddie Murphy movie Trading Places. That was kind of a comedy that was based on when the Hunt brothers tried to corner the silver market back in the 80s, 70s, decades ago. But I digress. For those of you who are still valuing your wealth in those shiny yellow rocks, in antique Bitcoin, in analog Bitcoin, it will currently cost you 33.61 ounce gold coins to purchase just one Bitcoin. And that number is only trending more expensive as Bitcoin goes up in value compared to Bitcoin, or compared to gold. For those of you who value your wealth in pizza, which I think is honestly smarter than valuing your wealth in gold. I'm not saying buy pizzas and stick them in your safe, but you can't eat a gold coin, right? And you can't take a gold coin to Papa John's and buy a pizza. You can, however, buy pizza with Bitcoin. And if you were to try and spend one whole Bitcoin on pizzas, one Bitcoin would currently purchase you 5,462 large pepperoni pizzas from Papa John's. That is a pizza every day for more than 14 years. In fact, just a hair under 15 years, which, as I've said over and over again when I cite this metric, I don't think you'd ever be able to spend one whole Bitcoin on pizza, because 14 and a half years is, well, that's almost four halvings from now, four halvings being 16 years. But we're already a year through this halving. So multiple additional halvings, multiple additional halving-inspired bull runs. Or if you don't believe that the halving cycle is going to continue, then you believe that we're going to have a super cycle where, Bitcoin will be so highly adopted, it just never has a big 80% or 50% retracement ever again, and it just goes up and to the right with no major pullbacks. And of course, if that were to happen, then you would run out of your ability to eat an entire Bitcoin worth of pizza even faster. But for example, if this Bitcoin bull run is over, let's say Bitcoin doesn't go any higher, a silly assumption, but let's say that's your assumption, and then Bitcoin retraces, well, then we have the 2028 halving coming up well before 15 years from now, and then we would surpass 109,000 and say we go to just 150 or 200,000. We'll keep it conservative that in 2029, Bitcoin only hits 200,000 and then retraces to 100,000. But then in 2032 or 2033, Bitcoin breaks 200,000 and maybe goes up to 500,000. Well, now we'd be talking about 45 or 50 years worth of pizza, already rapidly starting to eclipse the amount of lifespan left in the average adult that's listening to this podcast. Obviously, if you're just born today or if you're a teenager, you'll be alive 50 years from now. But unless technology rapidly improves, if you're in your 50s or if you're a boomer listening to this podcast, you know where I'm going with that. And that's why you're probably here to build generational wealth. And that's why Bitcoin is appealing to those of us who aren't in our 20s anymore, amongst other reasons. All right, that metric that has been my favorite metric to track the entire history of this podcast. Bitcoin's 24-hour transaction rate is humming right along, averaging 4.57 transactions per second, up just a little bit from last DCA Wednesday. And of course, the price of Bitcoin is up just a little bit from last DCA Wednesday. So the utility of that metric, while correlation doesn't necessarily equal causation, remains pretty much undefeated, that anytime the average transaction rate of Bitcoin is up, the price is going up. And anytime it's down, the price has been trending down. I went into this in detail a couple episodes back where I said you would think on-chain activity would be high, whether the price is going up or whether the price is going down, because when the price is going up, people are buying it and moving it to their hardware wallets. When the price is going down, people are moving it to the exchanges and panic selling. But that hasn't been the case, at least on DCA Wednesdays for the last almost 4 years now. Every time the transaction rate of Bitcoin was up, the price had been going up. And every time the transaction volume was down, the price is going down. It used to be anytime the transaction rate was below about 3.15 transactions per second, we would see that Bitcoin was trending down. And if it was higher than that, Bitcoin had been trending up. That metric got a little bit distorted as we started seeing all the on-chain spam from the ordinals, inscriptions, the BRC20 tokens. And of course, as Lightning has become more widely adopted, as second layer solutions have matured a little bit, that's taken some of the pressure off of the on-chain as well. So that 4.57 transactions per second average, back in the day, it would have had to have been higher to account for when people are going to Starbucks or buying their coffee from the Good Beans in El Salvador. Hey, Gabe, hope you're listening. For example, if you're making those transactions on Lightning, well, when Lightning didn't exist, you would have had to have been making those transactions on chain, and therefore that metric would have been higher. So the fact that we're seeing an increase, we've got 4.57 transactions per second now instead of when 3.15 would have been considered healthy. That doesn't even take into account all those off-chain transactions that would normally be bumping that number up, where they're not second layer solutions. So that's really cool. All right, speaking of on-chain activity, Bitcoin's mempool remains relatively clear. Clark Moody's dashboard is showing 6,611 transactions in their mempool, Mempool.space is showing 6,609 transactions in their mempool. Back when we had a lot of mempool bloat, there was always a huge discrepancy between Clark Moody's mempool and Mempool.space's mempool. That is because Clark Moody was running a default mempool size, which means it was maxing out. Whereas Mempool.space is running a larger mempool, so it wasn't kicking transactions that were below a certain threshold out of its mempool, so its mempool was larger. Now that both, now the mempool has cleared, neither mempool would be anywhere near their limit, so they're pretty much in agreement. But there's still a slight difference. And the reason there's a slight difference, well, it's most likely because of the way that Bitcoin transactions propagate. If I send a transaction through my node will propagate that transaction out like ripples on a pond or like a spider web, moving out to the next node, the closest nodes around it. Now, a node farther away from me will see that transaction later than the nodes closer to me. We're talking seconds or milliseconds maybe, but the fact of the matter means some nodes are going to see transactions before other nodes do, and that's why they're never going to be fully in agreement as to exactly how many transactions there are in the mempool. One of the reasons Odell likes to remind us that there isn't a quote-unquote mempool, there are mempools. I think that's semantics. But the point being, to have them in agreement with only 2 transactions difference, that's pretty incredible. So mempools are still relatively clear, not completely empty. There are several blocks where the transaction's pending, but still a great time to consolidate some UTXOs if you've been dragging your feet on that, or maybe you want to move to a multi-sig setup or a nicer hardware wallet setup than what you're currently using. Maybe just change hardware wallets that you're using. Now's the time to do it, because if you do need to send an on-chain transaction, well, fees are still relatively cheap. Clark Moody's dashboard, for example, their fee estimator is saying if you have a high priority transaction you need to guarantee is mined in the next block or two, you only need to include a fee of 3 sats per VByte. And if you have a few hours or a day to wait, they're saying that a fee of just 1 sat per VByte will be mined within a day. Looking at the last several blocks, the last 1, 2, 3, 4, 5, the last 5 blocks in a row all included transactions with fees of just 1 sat per VByte. So they are clearing. Mempool.space is in agreement. They're also saying that a high priority transaction should include a fee of 3 sats per VByte. And Blevs, we're talking about 41 cents to move a functionally unlimited amount of money. Bitcoin has a market cap of less than 2 trillion. So there is a limit, but the point being there isn't technically a limit. You can send whatever you have. You could send $1, or you could send $100 billion, or, if you have $1 trillion of the Bitcoin, you could send $1 trillion of the Bitcoin anywhere in the world, completely unstoppable for 41 cents. And you can't mail a postcard for 41 cents. Mempool.space is saying if you have a medium or a low priority transaction, you should still include a fee of 3 sats per VByte. And their no priority transaction, which could take up to a week, they're saying still needs a fee of 2 sats per VByte. I think that's about double because, as I just said, there's the last 5 blocks in a row all included 1 sat per VByte transactions. But if you have an on-chain transaction to do, make sure, this is perishable information. So make sure you have the most up-to-date data possible before you start lowballing fees. And make sure you get your data from multiple sources, because oftentimes Mempool.space and Clark Moody's fee estimator are telling completely different stories. And most of your wallets always overestimate the fee if you use the default fee, if they don't let you choose your fee. The last time I tried to play with a wallet that wanted to suggest a fee for me, it was like a $5 fee that they wanted to include. And of course, their idea is they want to get that transaction out of there. They wanted to get it confirmed ASAP, so they overestimate. Again, that's a you do you thing, and it depends on your skill level and what you're comfortable with doing. Obviously, if you do lowball a fee, make sure you're familiar with things like replace by fee or child pays for parent, which will allow you to change your fee later if fees do spike so it doesn't get stuck. Or if you're familiar with mempool.space's transaction accelerator, where you can go pick any transaction that's pending in the mempool, pay a small fee and have it boosted in priority. But make sure you know how to do that if you're gonna lowball. But even 3 sats per VByte, that should be, according to both fee estimators right now at this point in time, should be mined relatively immediately into the next block or so. And that's not lowballing, and it's still dirt cheap at 41 cents US dollars to make that transaction. All right. Since the last Bitcoin Bulletin podcast, we had a upward difficulty adjustment in the difficulty it takes to mine Bitcoin, a whopping 5.6% increase. That's the largest increase we've seen in months. There was a 6.2% increase a couple of months ago, but that was an outlier. And if you had been following this podcast 3 DCA Wednesdays ago, it was looking like that was going to be a downward difficulty adjustment. So obviously hash power surged back onto the network because we ended up with a relatively large difficulty adjustment just 491 blocks ago. If you don't know, or if you need a reminder, Bitcoin adjusts the difficulty that it takes to mine a block of Bitcoin to find the next block every 2016 blocks. It does so by taking the average time that those 2016 blocks took to be mined, and it shoots for an average of 10 minutes. And if blocks are coming in slower than 10 minutes, well, it makes it a little bit easier to mine Bitcoin to try and speed things up. If Bitcoin blocks are coming in faster than 10 minutes, well, difficulty goes up to slow it down. Again, shooting for an average of one block every 10 minutes. Of course, it is an average. And of course, the amount of computing power dedicated to securing the Bitcoin network has been going up and to the right, just like the price of Bitcoin has for the entire history of Bitcoin for the most part. A few notable pullbacks here and there. But again, if you zoom out, hash power has gone up and to the right. So you'd expect that Bitcoin difficulty, it goes up and to the right as well. Currently, we're 1,525 blocks away from the next difficulty adjustment. So, just barely started this mining difficulty epic. And with only 491 blocks down, again, this is an average, so it's too soon really to tell. But those first 491 blocks have been zooming in faster than 10 minutes on average. So it's looking like if that holds, there will be potentially another fairly large mining difficulty increase, depending where you get that data, anywhere from 5.9 to just 1.2%. Again, too early to know. And for the average pleb, this really doesn't concern you because, again, it's an average. Last DCA Wednesday, we were looking at blocks that had taken over an hour to come in, and then other blocks that came in 2 blocks within 30 seconds of each other. And again, that's why they average 2016 blocks, because sometimes blocks come in really fast, other times they come in a little bit slower. But by averaging the time that it took 2016 blocks to come in, you get a much, much more reliable average. But again, if that holds, we're looking at a potentially another steep increase in difficulty, and that is because those first 400 blocks or so came in slower than they should have come in. They came in at an average of 10 minutes and 39 seconds. So 39 seconds slower than the 10 minutes Bitcoin's looking for. Despite that, the estimated computing power securing the network is actually up about 2 exahash from it's up almost 10 exahash from last DCA Wednesday, coming in at 780 exahash even. I would have to guess that we're probably actually not going to see a decrease in difficulty because, most likely over the next 1,500 so blocks, we're going to see things get back to normal. And even if, computing power had dipped a little bit, most likely additional computing power will come back online. That has been the trend for all of Bitcoin's history. But again, this is only really important if you're a miner because, well, if you are a miner, it got 5.6% less profitable for you to mine at the last difficulty adjustment. All right. Before we get on to the news, I want to take a minute to thank those of you listening on your favorite Podcasting 2.0 apps such as Fountain. Podcasting 2.0 allows you to support this and any other podcast through the value for value method, where you can either stream sats on a minute-by-minute basis as you listen, where you decide this podcast is worth 1 sat per minute of my time to listen to, or I feel like I'm getting 10 sats per minute worth of value for listening to this podcast, and you can contribute that value back and stream it as you listen. Or you can send a boost, which is it's basically a shout out. It's a one-time boost where you send a Lightning transaction, but it includes a message where you can let us know what you think about the podcast. Like I said, like a shout out. You can let us know what's going on in the community, just say hi or say anything you want. But because it is a Lightning transaction, you're contributing value back to this podcast in the form of Satoshis. We do not have any boosts to read this week, but when we do receive boosts, we read them on the next episode. So thank you to those of you listening and to those of you who have supported this podcast in the past. And speaking of those of you listening to this podcast, our geographic distribution of listeners has remained completely unchanged again this week. That is not unusual. It tends to ossify. I'm hedging this a little bit because I used to host this podcast on Anchor, Then it became Anchor by Spotify when Spotify bought Anchor. And then they migrated it to where basically it's just Spotify and it's creators for Spotify or Spotify for creators. And as they have transitioned into completely erasing the last vestiges of what it meant to be on Anchor, one of the things they did is they started skewing my statistics, or not skewing my statistics, but presenting them in a way that when I look at the stats, for example, I can see the total number of plays on every episode, but I can't see more detailed data unless those listens were on Spotify. Almost nobody I know listens to podcasts on Spotify. Really the only reason that Spotify didn't even really have podcasts on it until they made that big push where they signed Joe Rogan and they started, paying hundreds of millions of dollars to have these big podcasters on there. And then they made the grab where they bought Anchor. The point being, a lot of these statistics are a little skewed. So I was able to find total statistics, not broken down by where you were listening, but when I looked at like the last 7 days, for example, it said you had, well, like on Wednesday when I hit upload, I had relatively shortly within just a matter of hours, it showed my total number of listens had gone up by 200 listens, but no podcast had any additional listens on it. And if you looked at the total number of listens on the graph, it showed 0. But then there was a spike to that 200 and then flatlined and nothing. And I've had no stats updated within the last week. So, for example, if you listen to this podcast any day other than last Wednesday, there was at least one listen and the stats showed an immediate spike to 200, then nothing. And that's because stats on Spotify are effed up right now. So if there's a country that has surged into the top 10 and it's not reflecting, I apologize. But the best statistics I can show that it's remained about the same. And that is the top 10 countries for listenership are as follows. Number 1, where more than half of you are listening, remains the United States of America. So hello and thank you to my fellow Americans listening out there from right here in the US of A. Number 2 remains Singapore. They were a newcomer a month or so ago, surging out of well below the top 10 and vaulting all the way as high as the number 2 position, where they remain today at the number 2 spot. So thank you to everyone listening from Singapore. Apa kabar. Number 3 remains Germany. They've held that spot for months. So Dankeschön, mein friends in Deutschland. Danke für alles. Number 4 remains Argentina. Also, they've been in that spot for months. So hola, muchas gracias, amigos in Argentina. Number 5 remains Luxembourg. So Dankeschön, mein friends in Luxembourg, or Morgen to those of you who speak Luxembourgish. Number 5 remains Canada. So hello to my friends, probably really cold up there because I have a family member trying to drive across the country right now, and currently they're driving across Iowa, and it's about 2 degrees and snowing in Iowa, and there's Minnesota in the way before you get to Canada. So even if it's no colder than it is just in the Midwestern United States, it is way colder than my taste, where it was almost 80 degrees here today on Florida's sunny Space Coast. I'm still wearing shorts, t-shirts, and flip-flops. But for those of you who are shivering away up in the frozen white north, thank you, and hello to all of you listening from Canada. Number 7 remains our cousins across the pond in the United Kingdom. So hello and thank you to all of those listening from the UK. Number 8 remains Spain. So hola, muchas gracias, amigos in Spain. Number 9 remains Australia. So hello and thank you to those of you down under. Number 10 remains Mexico. So hola, muchas gracias, amigos in Mexico. All right. That is it for the stats. Now on to the news. As is usual, often, and especially during the bull run, the news tends to hover around the price and the price tends to be the news. Again, I have repeatedly said that this really feels like we're repeating the 2016 halving cycle in many ways. Not repeating, but they say history doesn't repeat, but it rhymes. And right now, well, January certainly felt like January 2017, and this still feels like where we were at the beginning of February of 2017. Again, during 2017, we had multiple drawdowns, including one at the end of January, which corresponded almost precisely with what we saw in the last couple of weeks. Now, last episode, I mentioned that this last time around was blamed on the Chinese New Year and why it was blamed on the Chinese New Year. The point is, nobody knows if there was even an actual trigger, and if there was, what that trigger may have been. Bitcoin markets are subject to market cycles. just like everything else. And sometimes it's just a matter of the market taking a breather. So there isn't necessarily a reason why Bitcoin went all the way up to 109,000, crossed 100,000 a couple times, went all the way up to 109,000 and is now down in the upper $90,000 range. But Whale Panda tweeted out a hint for what he thinks might possibly be the reason that Bitcoin's price has been a little bit depressed in the last month. He's at Whale Panda on Twitter. So Whale Panda tweeted yesterday, "So we found the major seller last month, and it's the one that keeps talking about hodling and alt seasons, at CZ Binance." And he retweeted a tweet from Woo Blockchain saying, "From January to February 2025, Binance's own BTC holdings are suspected to have dropped from 46,896 to 2,747. ETH holdings have dropped from about 216,313 to 175. Most have been converted to USDC. It may be a profit accrual at the beginning of the year. Similar situations occurred in June 2023, parentheses paying a fine, and February 2024. So Binance apparently has dumped more than 44,000 Bitcoin in the last month. That is a significant chunk of coin. And if there were to be a trigger that would suppress the price, a massive sell over a period of a month would potentially correspond to that. Obviously, the markets are influenced by supply and demand. And when the supply of Bitcoin for sale is tight, price tends to go up, kind of like we saw with the short squeeze of GameStop. The price of GameStop went through the roof only because holders of GameStop refused to sell. And those who had shorted GameStop absolutely had no choice but to buy shares. And since people weren't willing to sell it, the price went through the roof. Conversely, when people are dumping any commodity, it tends to drive the price down. So that might be a potential reason for why the price of Bitcoin has remained what many people think is depressed during the first month of 2025. I, however, don't necessarily think we even needed a reason. Bitcoin is doing what Bitcoin does, but it's doing so in a manner that, I tweeted and I talked about last week that if you compare this halving cycle with the previous halving cycle, or with the previous halving cycles, and you look at the 2016 halving cycle, man, that chart for 2016 from the cycle low, it's almost like watching a vine grow up a branch. I mean, the price of Bitcoin in this halving in 2016, 2017, or compared to 2016, 2017, is just curly queuing around the graph of that halving cycle. Sometimes it's a little higher, sometimes it's a little lower, but it's just snaking its way up the chart like it's trying to repeat 2017 right now. And that goes with the general vibe that I've been telling you that I've been getting. All right, the other news that's been making a lot of headlines in the last 2 weeks, is not just whether or not we're going to have a national U.S. strategic Bitcoin reserve, but the states introducing their own bills, trying to establish their own strategic Bitcoin reserves. It totally makes sense, but a lot of people, when they got hyped about nation state FOMO, didn't even stop to think about, for example, in the United States, we have 50 sovereign states that make up this union, and each one of those states, it looks like, is going to be FOMOing in to try and buy as much Bitcoin as they can as well. And 50 smaller states trying to buy as much Bitcoin as they can could actually be a bigger influence than just one big country. Along those lines, Pete Rizzo, who's the Bitcoin historian on Twitter, tweeted yesterday, "Breaking: Oklahoma Bitcoin Reserve Bill just passed its first committee vote, one step closer to buying Bitcoin." Following that up with another tweet saying Oklahoma is now in second place. Oklahoma and Arizona's Bitcoin reserve bills are now at a similar stage, just behind Utah. So Arizona and Oklahoma racing neck and neck to be the second potential state to establish a Bitcoin reserve, with Utah looking like it's going to be the first, mainly because Utah has like a 45-day legislative session. That's it. They meet for a short period of time and then they're done. They have to pass everything and go home, which is kind of how it should be, in my humble opinion. But because they have such a short legislative session, basically they meet during the previous months and they get together, they talk about what they want to do, and they put together their plan. Something that's illegal in Florida, for example, we've got what's called a sunshine law, where you can't conduct the people's business behind closed doors and then get together and just formally vote on it, and the people don't know what your decision-making process was. That has to be out in the open. But in Utah, at least, they get together, they plot out what they're going to do, then they get together, and in the span of just over a month, they vote on all the bills, and then they go home. So most likely, if they do adopt a Bitcoin strategic reserve, it will be soon and they will be first. The people that we're talking about, the way that Utah does their legislative process, also said that process where they meet and decide what bills they're going to present, that in all of the history of that being the case, I think all but one of the bills they agreed they were going to present and vote on had been passed. So if that holds true, then they're going to be the first state to have a state level strategic reserve. But as it stands, there are now 19 states with proposed Bitcoin reserve bills working through their legislatures at some phase, whether it's the bill's proposed, whether it's in committee, or whether it's moved out of committee and it's pending a vote. And that is not quite half of the country, but really significant, and almost double where we were just 2 weeks ago, when I think it was 7 or 8 states that had proposed strategic reserves. Currently, those states are as follows. We mentioned Utah, of course, Arizona. Last week, we talked about New Mexico, Wyoming, Montana, North Dakota, South Dakota, Iowa, Missouri, Illinois, Oklahoma, Texas, Kentucky, Ohio, Pennsylvania, Maryland, New York. Nope, not New York. Massachusetts, North Carolina, Florida. Am I missing one? Looks like New Hampshire, as well as that 19-ish. Either way, approximately 19 states that at some point have either proposed or have started working on legislation to establish a strategic Bitcoin reserve for their state. Of course, all it takes is that first state. All it took was the first state to say they were doing it. We've already seen FOMO. I mean, I consider that FOMO if you have a group of 10 people, or a group, in this case, we'll say 50 people, one person for each state, but we'll say they're people, not states. And if one person says, hey, I'm going to buy Bitcoin, I think it's going to be my treasury asset, all my money's going to be Bitcoin. And then 2 weeks later, 19 of those 50 people are like, me too, me too, me too. That is pretty epic FOMO. I mean, usually when you talk about FOMO, you don't talk about half the country aping into whatever that hot stock is, or half the people aping into Bitcoin or GameStop or whatever they're FOMOing into. So we certainly can call that state FOMO. And that's an example of what we expect to see on national levels. And I suspect we already are. It's already looking more and more likely like the United States is actually going to have that strategic Bitcoin reserve sometime. But of course, they established a process for determining it and proposing it, giving other countries the opportunity to try and front run the United States. Some of them are probably going to do so quietly. Others, like we talked about Czechoslovakia last week, that are doing so publicly. But when this really gets rolling, I mean, if you think about almost half of the states have gotten FOMO in the last 2 weeks. Imagine if half the countries on earth tried to FOMO into Bitcoin. I mean, the Bitcoin just isn't there. The only way that half the countries on earth, or even a quarter of the countries on earth, or 10% of the countries on earth could hope to have a Bitcoin reserve with millions or hundreds of millions or billions of dollars of the Bitcoin, the only way for that to happen is that the price of Bitcoin goes through the roof, because they're going to be stacking sats, not Bitcoin, because there's not enough Bitcoin for every country in the world to have 500,000 Bitcoin or 1 million Bitcoin. So that's exciting. And that is certainly another way that we could see Bitcoin explode past gold's market cap, even this cycle. I mean, even this halving cycle. Again, I say nobody has a crystal ball, and I don't like to try and make price predictions. I'm just saying this is how that could theoretically happen. If half the countries on earth decided that they were going to try and front run the United States, the price of Bitcoin would have to explode past the market cap of gold to be able to, for that to be able to happen. And we're not even talking about individuals or corporations or pension funds, etc., that are also all starting to get FOMO. Of course, I've often said that 2017 was going to be the bull run that vindicates MicroStrategy and that vindicates El Salvador. But specifically when it comes to MicroStrategy, or Strategy, as they refer to themselves now with their new branding, their new logo they unveiled last week. Last week, there was news, and I don't think I spoke about it because I thought it was BS. I didn't think it was true. It was, to me, patently false. There was no way it could be true, so I'm pretty sure I didn't even talk about it. Someone in my family brought it up to me, and I said, you just have to be wrong. But the FUD circulating last week was that MicroStrategy had bowed out, that they were done, that they were not going to purchase another single Bitcoin. And I thought, no fucking way. Pardon my French. You know, they just got done issuing an entire new class of stock solely for the purpose of stacking Bitcoin. I mean, they just did that. Why would they put the cork in their Bitcoin accumulation strategy? It just made nonsense. But Yahoo Finance, for example, a week ago today ran the headline, MicroStrategy pauses Bitcoin buying spree with earnings due. And there were a slew of other headlines. And I read every article I could find, and none of them, half the articles mentioned it in the headline, but didn't even actually mention it in the article. They would go on to talk about their upcoming earnings report, or say how much Bitcoin they had purchased in December, but not say anything about any statement from MicroStrategy about what they plan to do in the future. Of course, a lot of that makes sense because they were getting ready to release their corporate earnings. And there's a so-called blackout period where because of market manipulation laws, there are certain things you're just not allowed to say when you're getting ready to release, file any of your official reporting on your earnings. So anyway, I thought it was hooey that there's no way it was possibly true, and it's already been proven untrue. For example, just Monday, Michael Saylor. So just a couple of days after everybody was after all those headlines were saying that was it, MicroStrategy had tapped out, they were done. Michael Saylor tweeted out, MSTR has acquired 7,633 Bitcoin for $742.4 million at 97,225 per coin, and has achieved a Bitcoin yield of 4.1% year to date 2025. As of 2/9/2025, Strategy holds 478,740 Bitcoin acquired for $31.1 billion at $65,033 per Bitcoin. So it only took a couple of short days for that FUD to be proven remarkably untrue, with MicroStrategy aping in on another $742 million, $0.7 billion worth of additional Bitcoin, when people like Yahoo Finance were saying that they were not buying anymore. I mean, if you're not buying anymore, you certainly wouldn't be expected to buy almost $1 billion, right? So I don't think I talked about that FUD because it was just ridiculous. There was no way it was true, and obviously now we know that's the case. It was not true. Now, speaking of corporate FOMO, a lot of companies, a lot of media companies are running headlines about that corporate FOMO, including just in the last day or two, with Fortune magazine running the headline, dozens of companies are stealing MicroStrategy's playbook to hoard Bitcoin in their corporate treasuries. The article goes on to say about 78 companies worldwide have added Bitcoin to their reserves. Now, 78 is not a lot of companies when you consider how many companies there are just in Florida, for example. There's certainly a lot more than 78 companies, large companies worldwide. But the fact of the matter is that not too terribly long ago, that we were talking about Tesla and MicroStrategy, and that was it. And now we're talking about 78 companies, not necessarily 78 MicroStrategies, but 78 companies, and that's only going to keep growing. The article goes on to say, newly renamed MicroStrategy may be the biggest corporate holder of Bitcoin, but it's far from the only one. Strategy, formerly MicroStrategy, is far and away the leader among crypto holding companies. Led by executive chairman and co-founder Michael Saylor, the company has amassed blah, 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 470,000 Bitcoin, blah, 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 since blah, blah, blah. So far in 2025, it has made 4 Bitcoin purchases, including $2 billion buys. The market strategy shares have skyrocketed more than 400% over the past year, and the company's $83 billion market cap trumps that of companies such as Capital One and Target. Its recently successful Bitcoin hoarding strategy has already attracted copycats. According to crypto security company CoinKite, 78 companies around the world also hold the cryptocurrency in their corporate treasuries, the Financial Times reported. Among the corporate buyers are pharmaceutical companies, advertisers, and others, which have amassed the cryptocurrency in part to diversify and hedge against inflation, but also to fend off short sellers by boosting their shares. It goes on to talk about OneMed.net, which has $4.6 million worth of Bitcoin, or had purchased $4.6 million of the Bitcoin through a sale of private stock, and another company, KULR, which it says provides thermal energy management products for NASA and the Navy. So think the space station and submarines. Also bought 510 Bitcoin in a move that CEO Michael Moe called a Michael Saylor inspiration. So the point being, the cat's out of the bag. Once it's kind of like, an avalanche. Once that first snowball starts running downhill, it might just be one snowball tumbling down a slope, but in a short order, that snowball can turn into a massive avalanche. And when it turns into a massive avalanche, nothing is going to stop, that FOMO, except when there is no Bitcoin for sale. And before that can happen, the price of Bitcoin is going to go astronomically high. I lined up a couple other articles to talk about as far as corporate adoption of Bitcoin, but I'm running up against a hard stop, so I'm going to skip over those. You get the point. Corporate FOMO's coming, state FOMO's coming, nation state FOMO's coming, and there's still plenty of room for retail FOMO for it's kind of like corporations, but funds, hedge funds, endowments, pension funds, etc. All of those we've just barely seen the tip of the iceberg. When that snowball gets rolling, look out below. All right. In an interesting note, you may have seen the news that a U.S. school teacher that was being held in prison by Russia has recently been released in a prisoner trade with the United States. BBC ran the headline, U.S. releases Russian Bitcoin fraud suspect as Belarus frees American. It tries to spin this pretty heavily about kind of almost in an anti-Trump way where like we're releasing a Bitcoin fraudster. We did whatever. We bent over backwards to get a fraudster, a Bitcoin fraudster released from a Russian jail. But the article notes that the U.S. will release a Russian national as part of an exchange that brought home an American school teacher, Mark Fogel. Alexander Vinnick was arrested. I said Bitcoin fraudster being released to Russia in exchange for the U.S. teacher. Not that Russia was releasing a fraudster. My bad. Alexander Vinnick was arrested in 2017 on charges related to laundering billions of dollars using virtual currency Bitcoin. A U.S. grand jury indicted Vinnick on 21 counts related to the laundering of stolen funds. The White House confirmed to the BBC Vinnick's identity and impending release. All right. So who is Mark Fogel? He's a teacher. Okay. Who is Vinnick? Well, Vinnick is the Bitcoin fraudster. Or is he? The article goes on to describe what happens. Now, they try and frame this, I think, from a negative light, but if you read between the lines, you'll see what's really going on here. It says, Vinnick, the Russian national, operated cryptocurrency exchange BTCE. He was arrested in Greece at the request of U.S. authorities who believe he was responsible for laundering as much as $4 billion through the exchange. All right, so they're getting on where he's laundering stolen funds, right? But was he? The article continues. The Justice Department said that the firm had no anti-money laundering or KYC know your customer in processes in place, as required by U.S. federal law. It collected no customer data, which investigators said made it attractive to criminals. So what they're saying is Vinnick wasn't laundering billions of dollars. Vinnick ran a company. And what the real crime here was that he didn't have strict KYC laws in place. He wasn't doing enough financial surveillance, so criminals were trading and buying and selling Bitcoin, et cetera, on that exchange. And that was the essence of the crime. So what we've got here, while not necessarily the same as Ross Ulbricht, is a case of where was Alexander Vinnick really a criminal, or did he just write code? Did he just run an exchange? Even if he was guilty of knowingly looking the other way and helping people launder money on exchange, drug dealers, terrorists, whatever, it's certainly not on par with what we saw just a year ago with the Biden administration traded the Lord of War, of all people, for a freaking women's basketball player who was stupid enough to try to go through customs in a foreign country while carrying weed in her purse or whatever. So we traded the Lord of War for a moron, and the media cheered that. We free a school teacher and give back a software engineer or an exchange owner and operator in exchange, and this is corruption at the highest levels according to the traditional media. So basically, what I'm getting at is there was a Bitcoin tie to that headline. You might have heard that there was this prisoner exchange and that Mark Fogel came back to the United States. But what you didn't necessarily know was that there was a tie-in to the Bitcoin community, that they swapped him for a crypto exchange operator. All right. One last bit of news before we move on to our DCA segment, and that is, well, two last pieces I want to talk about. That Proton Mail, as in the company that provides you the free encrypted email service, has finally launched their Bitcoin wallet. And apparently it's open sourced and self-custody, but one of the things that makes it unique is that you can also receive Bitcoin to your Proton Mail address. So somebody doesn't even need to know your Bitcoin address. They just know what your email is. Like, for example, I'm not soliciting Bitcoin here, but I'm saying our address for this podcast is bitcoinbulletin@protonmail.com. Simply with that information, someone can send Bitcoin on chain to this podcast to a self-custody open source wallet. And that's pretty cool. Whether or not that's truly self-custody, if there's definitely a middleman in there, if they're handling converting it from your email to an actual on-chain address, is debatable. But the point being, that's the sort of UTX that is appealing to normies, and that is going to help Bitcoin adoption. Last but not least, and this falls into the category of you don't change Bitcoin, but Bitcoin changes you. Eric Balkunas tweeted, Schwab is now allowing 24-hour trading to all retail clients. You can now degen out on stocks and ETFs all night long. In their pilot test, they found most popular times were 8 p.m. to 9 p.m. and 3 to 4 a.m. And it leaks to an article in Bloomberg about that. Now, you can't trade any stock and you can't trade them all 24 hours a day, 7 days a week, but it's a start. And it's something that you wouldn't have ever considered hearing because, TradFi bulks at degens trading their cryptocurrencies at the weekends and at nights while they're out golfing or having tea or sailing their yachts. And there's no way in hell Charles Schwab, a major normie broker, discount broker, would have bent over backwards to implement 24-hour stock trading if they didn't feel the pressure and they weren't wanting to get in on the action from the new paradigm that Bitcoin and all the S coins have introduced by trading 24 hours a day, 7 days a week. So again, you don't change Bitcoin. Bitcoin changes you, and Bitcoin changes the financial system. And this is just one small example of that. All right, on to what makes today and every Wednesday special, and that is that today is DCA Wednesday. What is DCA, you might ask? Well, DCA, it's short for dollar cost averaging. And dollar cost averaging is an investment strategy where you invest your money in equal portions at regular intervals, regardless of price. For example, this is going to be our 186th stack. We chose our equal portion at just $20 US. I wanted to keep it as simple as possible and as relatable as possible for as many people listening as possible. That's a you do you thing. If $20 is nothing to you, then maybe you're going to stack more. If $20 is a lot for you, maybe you stack just $5. The point being, you stack a consistent portion at a regular interval. Consistency is key. That the whole idea of time in the markets beats timing the markets. And so far, we have stacked 185 Wednesdays, and in those Wednesdays, we've converted $3,700 US at just $20 a Wednesday into a total stack of 0.10370 so sats. So 10,370,863 sats, more than 0.1 Bitcoin. And we did so at an average purchase price of $35,676.88, because the beauty of dollar cost averaging is while we bought the all-time high, we also bought the cycle low. We bought everything in between, but by buying every Wednesday, regardless of price, our average price is just $35,676. Obviously, significantly cheaper than the current US dollar price of Bitcoin. To grow today's stack, as usual, we're going to use the Cash App. I've got $20 already on Cash App, but the neat thing about Cash App is if I did not, Cash App lets you transfer money immediately, invest that money into Bitcoin immediately, and transfer it to your hardware wallet immediately, and do so with no mining fee. Cash App is not a sponsor of the show, and they might not even be available where you're listening, but I like Cash App, so we're going to use Cash App. I've already got Cash App open. $20 is already on Cash App, so it's just a matter of tapping Bitcoin, tapping buy. Got to manually enter $20. They try and make you mix it up by, sometimes you can just tap a button that says $20. This time it says 10, 25, 50. So they're trying to encourage me to invest more, but I'm going to manually enter $20 US. Tap confirm. And boom, just like that, we stacked another 19,994 sats. So Bitcoin's up a tiny bit from when we started this podcast. And of course, the fee made so we purchased at $97,770, but because there's a 2.25% fee with Cash App, it means effectively we paid just a hair over $100,000 per Bitcoin, which means we got just a smidgen less than 20,000 Satoshis, so slightly less than 1,000 sats per dollar. But those 19,000, almost 20,000 Satoshis raise our total stack now to 10,390,857 sats. It also increases that average purchase price a tiny bit, another 123. Well, that's weird. Last week, our purchase increased our average cost basis by $123.82. And this time, our purchase increased our average cost basis by $123.82. That is weird to have two exactly identical numbers 2 weeks in a row, but c'est la vie. Either way, those 10.39 million Satoshis, when Bitcoin retakes its $100,000 per Bitcoin US dollar mark, which we're less than 2% below that right now. That stack, which we've spent just 3,720 US dollars on now, will have a US dollar value of $10,390.85. So significantly more than double what we paid for it. When, not if, but when Bitcoin hits 1 million US dollars, if we don't add one more single Satoshi to that stack, it will have a corresponding US dollar value of $103,908.57, which would be one hell of a return for just 3,720 US dollars. And we've said that when Bitcoin hits 10 million one day, that stack will be worth more than $1 million US dollars. And of course, you want to talk about 1 million being pie in the sky, but back in January 2022, Fidelity's director of global macro at Fidelity Investments said that they thought that by the year 2038, one Bitcoin could be worth as much as 1 billion US dollars. And if and when that were to happen, our current stack alone, without doing another single DCA Wednesday, without buying a single dip, not adding a single Satoshi to the stack, will have a US dollar fiat value of $103,908,570 US dollars. And that is mind-boggling, but not unbelievable. Whether I see that in my lifetime, whether it happens by 2038 or whether it takes longer, it doesn't seem unreasonable to me that one day one Bitcoin will be worth 1 billion US dollars. Who knows? No crystal ball, just fun to think about. But as usual, before I wrap up this podcast, I want to ask you to help support this podcast by feeding that algorithm monster, by sharing this episode, by rating and reviewing this podcast. And if you're listening on Apple Podcasts, by making sure that you still have automatic downloads enabled, because if you remember about a year ago, Apple started switching off downloads of podcasts if you don't listen to at least 2 episodes a week. We only do a weekly episode, so unless you go back and listen to old episodes every week, there's a chance that your downloads aren't there, which means you'll have a harder time scrolling through and seeing our podcast when you're looking for stuff to listen to, or if you're traveling on a plane or you're somewhere where you don't have data, we won't be in your download file. So again, that also helps feed that algorithm monster. You can also feed that algorithm monster by following us on Twitter or X, where we are at BTC Bulletin Pod. Again, you might notice we do not have a blue check mark. We are not paying Elon for publicity, which means we're getting throttled. Our tweets get buried, and fewer people will see them unless more people follow us. If you're not following us already, please do so. Again, we're at BTC Bulletin Pod on X. We do not spam you. I simply send updates about when new episodes come out, and every once in a while I'll send a link or two to something that we're going to talk about during the upcoming podcast or talked about in the last podcast or something I think you might find interesting. All right, that is going to do it. I'm a little bit over on time, so I got to get this cut, edited, and uploaded. But either way, don't forget to join us next Wednesday and every Wednesday while we continue to grow that stack, at least as long as people are willing to trade us paper fiat dollars for Satoshis. Either way, though, keep on stacking those sats, you sexy sat stackers.